So get off the mobile wave, get on the crypto wave, and think that through. So that kind of made the decision straightforward. It wasn't without risk, but the alternative was pretty much throw in the towel and just either get beat to death fast or beat to death slowly. I consider the value of all of the property in the world that's used to store wealth. So right now, if you're a wealthy individual and you wanted to give money to your grandchildren, you have a number of choices. You can either buy bars of gold, or you can buy ranches. You could buy blocks of Manhattan or buildings. You can buy shares of companies, corporate stocks. You could put money in a savings account and maybe buy sovereign debt or bonds, corporate bonds or other bonds. And when you add up all this stuff, it's like $500 trillion worth of stuff that people use. And the challenge with all these things is how do I know if I had $1 million today that it would still be worth $1 million 100 years from now? If I took $1 million of economic value in 100 years ago and I held it in dollars, the U.S. dollar is expanding about 7% a year for the past 100 years. So if you do the math, you find that you lose 99% of the economic value in cash. And that's why nobody in their right mind would put $1 million of cash in a box and put a time lock on it, and in the year 2120 expect their great grandchildren to open the box and for it to be worth anything. When you think about these things, you realize that gold doesn't really hold economic energy great. It just happens to be the best portable, non-sovereign way to move energy around. When you think of it as digital gold, then it should replace gold. Gold's worth $10 trillion, and that takes Bitcoin to 500,000. But when you think of it as digital property, like replacing buildings and land and other long storeholds of wealth, then, you're up by a factor of 20 or 30 from there. I mean, it should not be... It's much better than digital gold because I can move Bitcoin at the speed of light and I can program it to 1 million transactions an hour on an iPhone or a website. You can't do that with gold. So it's got more utility than gold, which means it's probably worth 20 or 30 trillion if it just replaces the gold. But instead of buying the Fontainebleau Hotel, which is a nice hotel, worth whatever billions in Miami Beach, instead of buying the equivalent amount of Bitcoin, if you bought the Bitcoin, you can move that to any city in the world every hour of the day. You can just move yourself to a different jurisdiction where there's a better tax treatment. And if you think of it like that, then it's a multi-$100 trillion asset class. So at 10 trillion, it's 500,000. At 100 trillion, it's 5 million. So I think, we're marching toward $10 trillion, which is, $10 million a coin, which is why Bitcoin enthusiasts see it's just a very great long-term store of value. And it's a great investment idea because it meets the needs of 8 billion people. So Bitcoin offers property rights at any scale, any amount of money, anybody in the world. And you don't have to worry about, will people like Picasso's? Will they still want buildings in Vegas or New York? Will some politician tax it away from me? Well, can I take it through an airport? So if you're looking for an egalitarian, utilitarian way for people to save money and protect their life force or protect their economic wealth for the next 100 years, and you are looking for something that's kind of consistent with the mobile wave, Android phones, iPhones, websites, that's truly global, it's more appealing to people in Nigeria and Argentina. We thought that we were late to them, but the truth is Google would have been a good idea to invest in, all the way up to like a few months ago. It's still getting more powerful, and you think you've fully embraced Google in the year 2018, but Google was going to get more powerful and surge And if you thought you understood it in 2020, by 2021, it was more powerful. And the same is true with Apple. And Apple and Google, probably more powerful than most nation states. Same with Microsoft. We thought Microsoft, we understood that one, and Microsoft got more powerful in the past 24 months. Bitcoin represents a paradigm shift. It's the digital transformation of money, property, and energy. And paradigm shifts are so profound that you're staring at them and you don't realize they took place because your worldview is constructed based upon a bunch of assumptions that you've always taken for granted. And so what Thomas Kuhn says in the structure of scientific revolutions and what we study at MIT is there's only two circumstances under which people willingly undergo a paradigm shift. And one way is you wait for the old guard to die. And the millennials they get it because they're different. And Einstein, said God does not play dice with the universe. Einstein never liked quantum theory. You could be a brilliant person, but you won't embrace the paradigm shift while you're alive in the absence of a crisis. Well, I will say though, even when it's 10 times better, what you have is a commercially successful venture. But for example, Warren Buffett never invested in Microsoft, and Warren Buffett never invested in Amazon, right? Even though it's 10 times better, right? If you have enough money and enough power, you can ignore. Second quarter of 2020, and what clicked was a couple of things. We had a K-shaped recovery. Main Street was shut down. It's pretty, millions of people have lost their jobs. The economy's contracting. And then Wall Street exploded and recovered and hit all-time highs. Yeah, financial assets were having the best year ever. People had great years. A lot of these hedge fund managers, they had the best year of their life in 2020 or 2021. Yeah. And Main Street assets were having the worst year in 30 years. And I had a company with $500 million in cash that was dead money. It was idle. It was generating 0% interest. The Federal Reserve said, we're not going to raise interest rates for 4 years. The company's stock was in the tank. At one point, in essence, when we were going through this, our company was valued at $60 a share in cash and $60 a share in the software business. And that was like 1 times revenue. And so, I looked at the world and I said, if the cash is dead money and if our stock is viewed as dead money, we've got a choice between a fast death, a slow death, or we ride out of the castle and we take a risk. The challenge of giving up the capital was first we'd lose our financial capital, and then we'd lose our human capital, and then we'd have no reason to exist and the company was going to zero. So notwithstanding whether you care whether a company lives or not, I didn't see it in the interest of my shareholders to watch the stock go to $60 a share and then watch us slide. We'd have to sell the company. So the second strategy is hold the cash, but the cash is, cash trash. Ray Dalio says that is generating 0% interest. And the money supply expanded by 20% a year for the past 2 years. You can see it in U.S. single-family homes, which shot up 40% in price. And so if the money's being devalued 20% a year and you're generating 0% interest, you got a negative real yield of minus 20%. And I did the math in my head and I concluded that pretty much the $500 million in purchasing power would be cut into $250 million of purchasing power in 36 to 48 months. So that's a slow death. I kind of knew, I tried everything. So I thought, well, what if I could find a digital gold, which was better gold than gold, something that is better than gold, but also a big tech monopoly? And here are my 3 criteria. I want it to be a better gold than gold. I want it to be a big tech monopoly, and I want no one else to appreciate it. I want it to be underappreciated. And that's what Bitcoin was in the second quarter of 2020. No one thought it was an institutional asset. Even though Amazon stock had doubled in the second quarter, Bitcoin was trading about the same as it had been trading in 2018 or 2019. It got up to 10,000, it had smashed down to 4,000, it was back at 10,000. So I looked at it and I said, well, based on all the information, You would think that a digital property network or a global digital money network is more valuable, knowing that people are losing confidence in currencies, losing confidence in central banks, losing confidence in governments. And this is a non-sovereign, open, decentralized system. And I said, well, this is a reasonable risk because it looks like the Facebook of money or the Google of money in the year 2010 or 2011. While 98% of the world doesn't understand it, it's a bit too complicated, they're afraid of it. But just because you don't understand it doesn't mean it isn't true. So get off the mobile wave, get on the crypto wave, and think that through. So that kind of made the decision straightforward. It wasn't without risk, but the alternative was pretty much throw in the towel and just either get beat to death fast or beat to death slowly. And so we got into this business at that time. And of course, the last 2 years have been, I think, fairly good ones in terms of commercialization, institutionalization of digital assets. It's pretty clear as if you look at the history of humanity and look at the history of science, that great improvements in the civilization and the human condition, they're all tied to technology. I've had a passion for a lot of things in life, but if we just focus upon Bitcoin right now, I think the fundamental issue is the energy balance in the civilization is broken. I think if you look at the civilization, you could say half of it is we provide goods and services and we trade with each other in order to upgrade the human condition and build things of value, right? We build bridges and buildings, we provide goods and services. But the other half is the money, the financial assets in the economy that create the financing, the liquidity that allow the trading. And money, the way I see money is in the ideal world, there'd be a certain ledger, a certain amount of money, 100 million units or 100 billion units, and no one would make any more. And God would keep track of the ledger. And if I owed you, it's in the celestial ledger. And then when you owe me, it's the same. Nobody can cheat anybody. But the real world is we use currencies and we use properties instead of having true money. So if you use the dollar and we trade it, it loses 7% of its value a year, except for the last 2 years when it loses 20% of its value a year. But that's the best anybody's going to get, because if you're trading in pesos or you're trading in Nigerian currency right now, these currencies are losing 50% of their value a year. And so this is the same as you're an athlete, Peter, and I bleed you a pint of blood every year, and it takes you about 4 weeks to recover. And so you don't run the marathon in the 4 weeks after I bleed you. That's like 5% inflation. But, what happens when I bleed you a pint of blood every month? Now you're just getting bled to death.